Yes, of course. The volatility seen towards the end of the month can be unsettling for some investors, but we think it's just a reflection of what happened in the market in terms of the delays we're seeing with the vaccine rollout here in Europe and the lockdowns. We think that volatility could continue, but we're clearly seeing that on a bottom-up perspective, earnings are starting to pick up. We're seeing earnings expectations for Q4 picking up already in December, and they will continue. We're very early in the earnings season, but we think that investors should focus on that. And we think that actually this year will be more driven by earnings rather, the market will be more by earnings rather than the PE of the market, basically.
Well, Bibiana, when it comes to earnings, obviously a huge determinant of how companies will fare comes down to vaccination rollout programs. This weekend, a huge amount of focus on the EU versus the UK, with the EU coming under a huge amount of criticism and scrutiny for its slower vaccination rollout than countries like the US and the UK. From a market's perspective, is there a trade to be made to play the different speed of vaccination rollouts across different countries, playing the UK, for example, against the European Union when it comes to equity markets?
And we see it more from a company-by-company perspective. But in the UK specifically, we think that it's ahead when it comes to the rollout of the vaccine. And given the more cyclical nature of the market overall, and taking into account the UK is very much on their own, given the Brexit risk that it has tailed off. We think there's an opportunity there, not only because of the vaccines, just because of the cheapness of the market and the cyclicality of the market that is mainly driven by international companies. So it will be more driven by economic recovery globally rather than just in the UK.